Hello, this is Tom Suvansri with Premier Trust Advisors. Today we want to talk about the topic of how do you grow your wealth. Now, when you think about growing wealth, most people associate that with investments and returns. And when we think about investments, most of us have just been more familiar with the stock market. That's what we hear in the media as where you invest. And as you look at returns in the stock market, for actual investor returns, they're significantly below what, say, an S&P 500 would indicate. Here, investor returns annually over a 20-year period are below 5%, where the S&P 500 is returning 8.19%. And there might be a lot of reasons for that. And you hear the case where a lot of fund managers cannot beat the indexes that we're following. And I think a lot of that has to also do with the volatility in the market and the emotional toll it takes on investors. And this is a situation where the investors are taking out significant amounts of debt to invest back into the market. And you see that in 2000s and in 2008, where the debt was rising, the margin debt was rising. And we see that today, that it's at enormous levels. And there's a lot of experts who are predicting that we're going to have a correction in the very near term. And so when most people are investing, a lot of they do that in a brokerage account, but for most people at companies, they're putting it into qualified plans like a 401k. They call it a savings plan, but it's really investing because you're putting much of your money into the stock market or bond market. And when we put our money there, we lose control of our money. There's a lot of rules that are associated with qualified plans through the government that imposes on us. For instance, our money is tied up for the most part until we're 59 and a half years old. So all the money you're putting in there and for each of your paychecks are being locked in there that it's hard to access except for a small amount. And obviously there is a tax benefit that you may gain from for investing in these qualified plans. However, there is a rule where the government requires you to take that money as a distribution starting at age 70 and a half, even if you don't need it. And this is the government telling us we want our money because they are making us take our money regardless of if we need it or want it. And within these qualified plans, the selection of investments are fairly limited. Yes, they'll have some different options on types of securities, but in the end, they're all in the securities in the markets, in bond markets. So not only do we lose some control with these sorts of accounts, there are also a lot of expenses that go along with it that take away from our returns. And one of the bigger areas is around fees, and whether it be administrative, management, a lot of fund fees and movements, and even hidden ones that are invisible to us. And on average, they can equate to 2.5% or higher. And there's been many articles written around these where you can get up as high as 4%, and that really takes away from our earning power. And the second big chunk of that relates to taxes. Now, certainly we get a tax benefit for utilizing these tools when we start investing. However, we are getting taxed at the harvest, the large number that we take as distributions later in our lives at ordinary income rates. And they can be substantial. And I don't know about you, but I feel that there's certainly a chance that tax rates are going to go significantly higher than they are today, given the debt that our government has taken on. So if the stock market using qualified plans is maybe not the optimal place to invest, where can I invest? So for those looking for excellent asset growth with minimal risk, senior life settlements are a very attractive option. They offer investors a way to participate in the secondary market for life insurance policies, which are considered an asset. Just as real estate deeds of trust can be bought and sold, so can life insurance policies. And they represent a huge secondary market. Life settlements invest in life insurance by purchasing policies that have become unwanted, unneeded, or unaffordable to elderly policyholders. In this way, they represent a true win-win scenario. Policy owners nearing life expectancy are able to turn a death benefit into a living benefit they can use now. At the same time, investors are able to purchase an asset with a guaranteed future value, rather than grow an asset with an unknown, perhaps even lower future value. And now, if you do have a qualified plan like an IRA, you can buy these using those accounts in a separate self-directed account. And these types of assets are not impacted by the stock market whatsoever. There's little correlation to it. And there's limited downside risk because they're using actuarial data to understand the larger numbers of pools of people in these policies and when they may pass. So another option to grow your wealth is within rental properties and direct real estate investments. Owning rental properties are a time-tested way to build wealth. Now, being a landlord can be time-intensive, but certainly rewarding. It can help you build wealth, generate cash flow, and it comes with some significant tax benefits. So if you're thinking about getting into real estate, for sure it's about starting small. Perhaps rent out part of your home when you're buying a new one. Certainly there's a lot of numbers to go, crunching the numbers, and we can help you with that to assess whether any potential rental properties that you're considering are viable and can be profitable. This is a team sport too. Getting help and advice is valuable, whether it be from your real estate attorney to realtors to handymen. Having that pool of people around you to help are going to help you be successful. And always have adequate cash for the unexpected, because within real estate, you can always expect something to happen that you weren't accounting for. So if you want to learn more about these types of opportunities to grow wealth, come visit us at our website, Premier Trust Advisors, and pick up our free ebook, Financial Planning Has Failed, or simply contact us. We look forward to talking to you and wish you much prosperity and wealth.